Welcome to Drill Down Earnings after the latest quarterly results from Autodesk. This is the business story behind one stock on the move. I'm Cory Johnson, Futurum Group's chief market strategist. Autodesk earnings, really important company when it comes to computer-aided design. One might argue with Adobe, the most important company in the world at that. And hey, they're right across this. Autodesk. That's Autodesk. They're right there. So you want to pay attention to these guys. A beat or a miss, that's all Wall Street cares about. This was certainly a beat. $1.47 billion in revenues, above the 3% above Wall Street's expectations. Profits way above Wall Street expectations, even though they were down. Profits of $282 million, down 4% from the previous year. I actually care about whether they're up or down year over year, but that call me crazy. What Wall Street cares about were the numbers that go beyond the sort of headline numbers are indeed the guidance, the outlook. And the outlook for Autodesk was really strong, both in terms of revenue, suggesting that revenue is going to be, somewhere under $1.4 billion for the next fiscal quarter, the first fiscal quarter of 2020, fiscal year 2025. And for the year, they're also suggesting growth of about 10%, billings growth of about 13%, 13.5%. So how did the stock react when these numbers came out? It went straight up, as you might expect. They're really happy. I didn't hear cheers across the street, but I should have listened. I got this thing in my ear, otherwise maybe I would have heard that. Stock's been up a lot in the last year. But I thought it was really interesting and maybe even a surprise because they're making some big changes. I always say you can change the fan belt whilst the engine runs, but it's harder that way. But they are taking their current process for buying subscriptions and initiating an entirely new process that involves Autodesk a lot more directly and works with the customers more carefully. That's often when a company falls on its face, and that's not what's happening here. Really positive for CEO Andrew Anagnost, God, I can never say his name, Anagnost, who talked about what they learned as they've started to roll out this new process globally and how they're bringing those lessons back to their biggest market here in the US.
What we did learn, we've now put into the process. In fact, we actually delayed our US rollout by 30 days based on some of the learnings during the Australian process. We changed our roadmap for some of the capabilities, updated and upgraded some of the capabilities in the transaction systems to kind of correspond with some things we saw in Australia. And we also kind of delivered some new enablement materials for partners and frankly for customers as well, that they understand how this transaction model impacts their relationship with Autodesk. So we definitely took the learnings to the bank to make sure that we were better prepared, and we even gave ourselves a little bit more time based on what we learned to finish up a few things that we think are going to be impactful.
So those are the lessons learned from CEO Andrew Anagnost, the CEO of Autodesk. And it's apparently going quite well if they're going to issue such bullish guidance, both in terms of bookings as well as revenue growth. All right, what's it all mean? What's your big drill on earnings takeaway? And what's one number that will tell us a whole lot more about Autodesk? I got that right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Here's your drill down earnings takeaway on the latest quarterly results from Autodesk. Fourth quarter results showed $1.47 billion in revenue, up 11.5%. That's good. Better than Wall Street thought. The profits were also better than Wall Street thought, $282 million, although it was worse than it was last year. But Wall Street wasn't expecting it, so I guess that's a surprise and maybe a good one. I don't know. How about the drill down earnings bite, though? Let's understand these numbers a little bit better. The biggest business at Autodesk, they're right across the street, I should know this. The biggest business at Autodesk is their design business. And that only grew at, and here's your number, 9.6%. Much slower than the rest of the business. So something to keep an eye on as they go forward and change their sales process in the design business, growing at less than 10%. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Quick earning takes on Instagram and TikTok at Drill Down Pod. Robust earning takes on YouTube at Futurum Group. Check me out on X at Cory TV. Drill Down Earnings, part of the 6.5 Media Group.